Well, we're going to go ahead and get started. And actually, just because we're in the digital age of Zoom meetings and COVID, my guest who's joining me today is actually not on the line yet and is wrapping up what he's working on. And I think we've all been there running between meetings. So we do make an effort to always have Unbind be a live broadcast. And so we're going to go ahead and do this. And when I'm hoping that Stacey Brown will be with us any minute now. And once we do, I got a lot of questions, including why are you late? Just kidding, it happens. But this is actually a pretty timely episode. We're leading into InsurTech Connect next week. So with our fourth episode of Unbind with Bindable, I should introduce myself. I'm Jocelyn Getson, Chief Growth Officer, and I'm really excited to kind of look at what is happening in the InsurTech space, because there is a lot going on. Every single day, we're hearing about new entrants into the market. Next week, if hopefully this audience especially is going to be either in attendance virtually or in person at ITC, I will be there in person. I'm already getting heart palpitations over my calendar next week, which is full. So, which is exciting. It's one of the first in-person events that we've actually had in a long time here. But in the InsurTech space, valuations are rising. IPOs are happening, it feels like, every single month. We're just seeing a lot of new development, and it's a little bit of a gold rush to some extent as to how people are valuing the companies, the funds that are being raised. But really all of that is stemming from the fact that there are so many InsurTechs, so many carriers and incumbents out there looking to embrace new technology. So really it's this meeting of the minds that's happening where you have great tech, great opportunity, and a fairly legacy industry and a lot of legacy systems that are just ripe for disruption. So what we're looking at trying to do is really break down what the value chain is, what parts of the value chain should an incumbent, should an insurance leader be focused on, and how they should be navigating, what to do next. Stacey, who hopefully is coming on any minute now, and I'm looking at my phone to just see. I do believe it'll be any second now. But Stacey actually is the founder of InsurTech Hartford, as well as being a leader at AXA XL, head of global technology and innovation at AXA XL, and an industry veteran. That said, we've had the opportunity to have a few conversations and over the years, and really looked at what he sees on the horizon, what we're finding ourselves as we all go out there and start talking to new potential partners, vendors, these ecosystems that are emerging. So really a lot to dive into. And I think that what I might do is have to look at tackling either a couple of the questions myself, which happy to do. I was hoping for more of a dialogue, which could happen soon. So when I look at what is happening in the InsurTech space, I'm just going to keep going with it. So one of the main things that Bindable has done recently, so Bindable, we focus on distribution of products. So we come in the middle. We work with carriers, hopefully who have an API. That's a big battle cry of mine, which is the more products we have on APIs, the easier they are to distribute, to embed. We actually work with carriers, but we're also working with the distribution channels, whether that be through traditional agency approaches embedded within other offers that are relevant. So we really sit in the hub, and we want everything to be easier, whether that's distribution, whether that's even claims, anywhere that we have consumer touch points, we're always looking to have partnerships or improve our own technology to make all of that easier. So we actually did a consumer survey recently that focused on what consumers care about. And one of the overwhelming stats that we saw was that 69% of participants admitted that they couldn't tell the difference between carriers. And here's Stacey. Hey, Stacey.
Hey, Jocelyn, how are you?
Hey, good. You just wanted to make me sweat a little bit today. So
good job dancing.
My husband would tease that I normally talk to myself. So it's actually, not that different, but thank you for joining us.
I'm so sorry. I apologize. Sometimes unplanned things happen. So I appreciate you covering for me.
Anytime. And of course, we know that insurance, that happens quite often. So unplanned things is exactly what we do here. So I'm going to back up because I did kind of give a little bit of your background, obviously with AXA XL, but also, heading and leading, being a lead organizer for InsurTech Hartford. But, as we were framing the conversation, one of the goals today is just to be able to give our listeners the takeaways of what should they be focused on when they hear all the noise around InsurTech, when they hear the word InsurTech, when we're all at ITC next week. What should they be prioritizing in their conversations? And in order for us to get there, I did want to kind of back up and ask you a really basic question, which is, how did you get into insurance? How did that happen?
That's a good conversation starter. I guess I needed a job, and there was one.
There you go.
I was in during the .com days. I had worked for some early stage companies, and that's how I got into my IT career. I had a whole retail career before that, but I got my first IT job in the late '90s, and after the .com bust, I was looking for work, and I found another startup down in the lower Connecticut area, and then 9/11 happened, and then that became bad news for me again. And one of my friends from college had gotten a job at Travelers, and he said, give me a resume, I might be able to get you in over here, and he did, right? And I was looking at it as decent pay, good benefits, no weekends. It sounds like a good job to me, and so that's how I got into it. But now here it is 20 years later, and I'm really passionate about the industry. I turned into an insurance geek, so to speak.
I mean, I'm right there with you, and I think that's it's great. It shows that you had that technology, and is that kind of what inspired you to really be a founding member of the InsurTech Hartford and get involved more in the InsurTech space itself as well?
Yeah, pretty much. So it was about 5 years ago now. I was seeing all these trends, investors getting interested in early stage companies, threatening to use technology in new ways to disrupt the industry. And the term InsurTech started popping up in some of the articles and stuff. And I thought, hey, you know what? That's me. I'm InsurTech, right? I've been doing this at that point for 15 years, and it's the focal point of life, everything I'm doing at work, and if anything's going on in this department, I want to be a part of it. And there was nothing really going on in the city of Hartford at the time, which was really unusual to me because there's a ton of insurance there. There was just really no InsurTech. So I just started having events as a means of getting people together and keep everybody informed and sharing information. And then we started doing hackathons and things to help drive startup engagement, and it's just grown to what it is today. But initially, I got started into it just out of my own self-interest on the subject.
I think that's a really cool thing, though, because I think, and one of the areas that insurance, where as we look at it is, what does the workforce look like in insurance? Who are the people that, 10 years from now, how do we attract new talent over the next few years? And I've used this analogy maybe even on this show, but certainly I'm sure in our conversations, which is, if you look at people who work at Uber, I don't feel like they took that job going, you know what, I'm going to disrupt the taxi service, or I work in the delivery space. I really feel that they work for a tech company. And I think what's fantastic is, you work for such a massive, reinsurer and traditional, and been around for that for generations, decades. I mean, and now you're combining that with the tech side of things, and that's what it needs, right? It's like to kind of retain and maintain what we've been doing. We're going to need underwriters. We're always going to need actuaries, et cetera. But how do we merge that so that people are attracted to the industry itself?
Yeah, so I recently helped out with an event that was being run by the Connecticut Department of Insurance geared towards next gen talent, and it was marketed at college students basically. And one of the things really is why should insurance be interesting? And I think people don't understand the amount of technology that exists in the insurance industry, and a level and layer above the technology is the data itself, right? Yeah. We're such a data heavy industry, not just the data that we produce, but all of the data we consume, right? Right. We harbor lots of data that have insights still to be unlocked that we've had in our coffers for years, right?
That's right.
Generations even, right? Some companies, I know one person at the Hartford who's third generation at the Hartford, right?
It's true. You're right. Like generational, even within, yes,
Yeah.
Oh,
So
my dad's worked here, my mom's worked there. You're right. Yeah.
yeah.
It's that
So
knowledge that we're handing down.
and
Yeah.
so all that data is out there, right? And how do we unlock, what can we unlock with it, and what will we do with that information once we have it? And so for people that love working with technology and love working with data, insurance is a wonderful place. And that's why I'm still here 20 years later. I came in as a techie guy. I was a computer programmer, software developer, engineer, whatever you want to call it. I wrote code for a living and built applications, right? And
Yes.
I once I got involved and I started seeing all the different, I mean, insurance has so many different use cases and benefits, but the basics of it are always the same, right? Submission comes in, it gets quoted, gets issued, gets amended, and then a claim comes in, it gets reserved, adjudicated, and then potentially paid, right? So
Yeah.
that's the life cycle. And doesn't matter what line of business or whatever, but the thing is, the way that happens and the different business models around it, it's such an interesting, you can never get bored of insurance because there's always something different you can do.
Yeah. And I mean, and there's a lot to be gained from data in the organizations. And when you're looking at that to really leverage it, I think you're at such a disadvantage if you're not. And I know we have data lakes out there, and it's the whole work of itself, just trying to, tap into it. But I mean, where do you see that data impacting the customer at the end of the day? How can insurers more effectively use it to really impact the customer's view of our space?
Well, I think, insurers tend to look at things in aggregate, right? And so hyper personalization, it's, people are looking into it, but I don't know that anybody's really cracked the code on it. And there comes an element to where regulation also makes that a challenge, right?
Yeah.
Because regulation says, hey, we've got to be fair, and there's certain factors you can't consider and stuff. And so I don't know that we'll ever get to that hyper personalization in insurance, but we can be really transparent about pricing, right? That's one of the best things that I think we can do. And I'm not talking about like exposing our APIs to aggregator sites, right? That's not transparent pricing. That's just ease of shopping, right?
That's right. Yep.
But we can be more transparent in pricing. In fact, a thing that's been getting a lot of attention lately is, whether or not credit scores should be used as a part of
Auto,
rating in auto, right? So, it's a good question, right?
And you're seeing some of the new like Loop and others that are really focused on building products without it, and Massachusetts, I know for a while has not included credit score, but right, how do we, because is it fair?
Right. And so people smarter than me are trying to answer that, but clearly there's been enough question raised about it. And so the question is, all right, if you can't use credit score, well, what can you use, right? You have to note all the risks are different, and you can classify them in certain ways, but how do you do that fairly, right? And that's why Loop and Carrie Ann and those folks are doing what they do, right? Because somebody's got to come up with a new answer and a new model, right? And it's going to be heavily reliant on data, right? So it goes right back to that data.
It does.
So
It does, and I think
what can carriers do with their data for the sake of their customers? More transparent pricing.
Absolutely. And it's that fine balance of using the data, to your point, for that transparency. And because I feel like customers are never going to want like data driven, from an actuarial standpoint, the avoidance of even wanting to take that risk is the other, is okay, when we get to that point, and we've discussed this before, but where someone's you're like an algorithm, we know your purchase behavior and what we're going to do. So it does get down to that drilled down. Are you going to have a claim or not? Yes or no? But insurance, and that thought really ties into what we're experiencing in this hardening market. We have a hardening market across the board where if you live in a coastal region, you're definitely at risk of a hurricane. Cyber is another one. Everyone has a cyber footprint out there that is ripe for attack. Climate change in general impacting all businesses. So how do you see that the hardening market, that use of data to kind of understand what's happening, impacting the adoption of tech, and product development even?
Well, there's always going to be an element of the unknown and the unpredictable. If we can get to a point where data insights equals clairvoyance, we will only have two things: insured people who don't need it and uninsured people that need it, right? Because no one would take on a risk if they knew that it was going to cost them money, right? And and if people knew that they were at low or zero risk of anything happening, why would they want to buy it, right? So there's this magic thing that happens because of the unknown factors in insurance that allows us to pool and spread the risk around, right? And that's why, a few years ago in the healthcare space, there was a lot of debate about Obamacare and all that stuff, and how introducing all these underserved and underinsured people who had medical problems into health plans was actually going to drive up the cost of healthcare, because now all that stuff had to get paid out of the same pool, which is being funded basically by pretty much the same people. So it was that was just one example of the challenges there. And
I think you see it even in driving. If we know this lane has a higher propensity of accidents, and that's the route you take to work, then this is the alternative. I mean, so
question though, what happens when all the traffic starts taking an alternate road, and does that road then start becoming the riskier road?
Exactly, like a Waze thing, where people start going down through a parking lot because that's how Waze told me how to go. You're right, and then it does become the riskier road, and then that one person.
I gotta admit, I'm guilty of driving down a road because Waze told me to, looking to my left and my right, thinking like, this is a very residential neighborhood, and this was probably a really quiet place at one point in time, and now cars are going down the street all day because that's what the apps are telling everybody to do.
It's so true. But it gets back to your point that there's always that element that it can shift. There's always something to monitor, to that unpredictable factor that people actually follow what they're supposed to do. And then, the risk opens up somewhere else. So it's, to me, it's a really interesting, one of the things, and to back up, because I started to kind of tackle this right before you joined, but it's the fact that one of our surveys, one of the Bindable surveys that we did with consumers, was around the fact that the overwhelming percentage of participants, like 69%, had said that they can't tell the difference between insurance companies. And I think it was, I'm just actually going to read my notes, 79% expressed the sentiment that most insurance providers are the same. Which, to us on the inside, there's always nuances, but for anyone on the outside looking in, the fact that they really are not telling the difference, what do you think creates that disconnect?
Well, number one is probably just knowledge and education, right? And what people choose to know about. It's almost like a bank is a bank, right? I put my money in my checking account, I write a check or use my debit card. Why does the logo on the door make a difference? Functionally, it works the same way, right? Some banks have more fees than others. Some banks have more minimum deposit requirements, but at the end of the day, a bank is a bank. I'm putting money in the bank and then accessing it when I need it. Right. So insurance, there's a certain commoditization around some of the product lines, like auto, right? The state says this is the minimum requirement. So that unless my bank tells me I need more coverage because I'm taking a loan on my vehicle, I'm buying the least amount of insurance that I can, not because I'm making a decision about what is the best product for me, but because somebody tells me I have to buy the product, and I'm just going to buy the one that I can find that gives me the lowest cost point, and allows me to check the compliance boxes, right?
Right.
So people, a lot of, it's often said about insurance, it's something that's sold, not bought, right? Because people will go out and say, let's put our good clothes on Sunday because we're going to go shopping for homeowners insurance, right?
Right. Well,
The
we
old
don't
days,
work we don't work weekends, so no, just kidding. With digital,
well,
you
we
can
do
that.
actually. That's part of the
Yeah.
trends too. Like in the old days, Saturday morning was the day that you went to the bank, you went to the insurance agent, you did all those things because you were working all week. You didn't have the time.
Yeah.
These weren't open 24/7. So you had the Saturday mornings before noon, you had to get to all these errands. And but now consumers have changed, and they expect to be able to access things about their policy and change their policy and cancel or buy new policies or add new coverages 24 hours a day when it makes sense to them, when they feel that they need to.
Yeah.
So I'm sorry, I
It's
might
true,
have
because you're
bounced
going to
around a
buy
little
your
bit.
car. Yeah, you're going to buy your car on a Saturday and you want that accessibility. You're not, you got to drive it off the lot. And how do you do that? And no, I think the advent of the digital marketplace, obviously over the last few years, and that just continues to grow, is a critical one to give people an access point. Agents are still a big component of it. But it's interesting to see how do you think insurers can bridge this gap, from, this no name, I just need insurance, I'll take it from whoever offers it first. How does that bridge get, created between the consumer and the brands?
I guess it's a tough question, but I'll cite, I'm trying to remember now. I have to do a quick, see if I have this open actually, but there was a recent study that Capgemini published. They do their annual InsurTech report, and they also do their annual insurance report. And in there they talked about CARE, right? CARE was an acronym for convenience, advice, and reach. And nice. I really think they've nailed it. I think that's what it comes down to. You have to be there. Was part of what I was just saying before. You have to be there when the customer needs you 24/7. That's a convenience thing. The advice part, that's a trickier one, right? Because for commoditized products and things we were just talking about, 79% of people buying auto feel that auto is auto. And you know what? It kind of is. What kind of advice do you need when you're just trying to buy the minimum state coverage, right?
Yeah.
Requirements. But when you're somebody who has larger assets and you start getting concerned about risk of loss, and now you start thinking, a little deeper about this stuff, and you need to tap into experts. And this is why there will always be a human in the loop in the insurance process, I believe. There comes a point in people's lives where they have to make decisions about their insurance, and they realize, like, I should probably talk to an expert about this, right? And so that advice piece is really, really important. So, we've seen digital brokerage in other industries, right? And I don't know that we are good at doing that yet in insurance. And I see some carriers doing it by like sending newsletters and trying to proactively push information to people who aren't necessarily looking for it when they're looking for it, right? And but the advice piece,
I think it's a good point. The advice piece is really, I agree. I think it's critical. I think at Bindable, just for reference, we do have quote to bind carriers on the platform, and we have a lot of carriers that don't have bind on their API. So it requires our agency. We have an agency, we support our partners' agents, we license our tech. So we're all about an agent being, somewhere in the background, and it does create an omni-channel experience. But even when there's bind options available, they still want to talk to an agent. So it's not just, you can't just say, oh, because there's not enough products that you can purchase digitally. When the average premiums are close to $1,000, if not much higher for auto and home bundling, when you're going to spend that amount of money, you want to make sure, especially if you're switching from a carrier or, have looked elsewhere, maybe have a couple of prices in front of you. What's the difference? What am I getting? What if this happens? So I feel like even though education's a critical, you're right. I think that trusted advisor role, maybe where the evolution happens is right now it's always the insurance agent, and it does need to be a licensed person. But I think, whether they find that agent through, their home mortgage company, or they're finding that agent through an embedded offer from a brand that they recognize, so I think how they find the agent might change. They're not waking up Saturday and, going to Main Street USA, not everybody, it still is relevant, but making sure that the Main Street USA agent has a presence online, but also just that's where that convenience and advice needs to really come together. You can't say, oh, because we offer it in, this brand's journey and it's embedded and it checks every box, which we do all day long with our partners, and it's fantastic. They still want to talk to an agent. So making sure that there's someone at the back end. I agree. I think it's going to be a long time before that shifts.
And you actually touched on the last part in the Capgemini report, right? So they called it care, convenience, advice, and the last part was reach. So embedded insurance, being there where the customer is, and being multi-channel or omni-channel, however we're calling it, whatever we're calling it.
Bionic insurance. There's a lot of terms out there.
That reach component is the third very important part. So how do insurers do a better job of differentiating? It's focusing on those three factors.
It is. And one area I wanted to bring up too was with you is around value-added services. So, having that core insurance product and maybe how carriers can and should leverage value-added services, which is one more way of describing the ecosystem, right? And what have you seen kind of coming out recently, or is there certain products that you see are really, either behind the missing an opportunity to really capitalize, or I can say cyber, tying like a risk mitigation service with the insurance product makes a ton of sense, but I'm sure you've seen other great examples too. But
yeah, I think just today I was reading about USAA is actually reselling Chubb's personal cyber coverage.
Yeah, their Blink product, that personal cyber.
Yeah, for personal cyber. And I'm like, well, that's interesting, right? So they've got USAA agents selling Chubb insurance, right? And
it's pretty cool to see, though. I mean, to see that kind of, it gets back to what's best for the customer, and if you have a great product that's easily, and the API does play, and if you can integrate it easily, it's like, why not? So I was encouraged by that.
What's also big about that is USAA basically not trying to be something that they're not, which is experts on cyber, right? And maybe they're working on that, but obviously they're choosing to use third party for a reason. So I'm just assuming that's a part of it.
No, I mean we see that a lot on our side. Bindable will have, and a lot I can't name, but we'll have InsurTechs or even carriers that might be monoline, might not be in all 50 states, and they can supplement by offering products on a white label standpoint for quoted not sold, for states they're not live in, for products they're thinking of but don't have yet. So I agree. I think there's the combination of doing what's best for the customer and allowing the experts to do their expert, but also that learning and that data component. Which comes from forming partnerships, maybe outside of where you normally would have looked.
And that was just product, but I think if your question was more about value-added services, we saw Travelers did that thing with Amazon where you can go and get devices for your home and save money on your homeowner's policy, right?
Yeah.
We've seen. So I work in the commercial insurance space, right? And that's another area where there's a lot of discussion and a lot of things being discovered, but there are these financial barriers. Like in personal lines, people buy stuff either number one, because they have to, or number two, because they want to, right? In commercial lines, people only buy things when it makes sense, right? Financial sense.
That's
right?
Financial sense.
So when you talk about things like IoT, right? And boy, we can monitor these buildings and tell you when there's a water leak or when the temperature is too hot and maybe there's a fire or whatever, right? Like that's all great, but make the business case for installing the sensors and monitoring it, right?
Yeah.
Well, suddenly it becomes a lot more difficult. Who's supposed to pay for that? Well, the insured doesn't want to pay for that, right? So this kind of stuff gets really,
what happens if they get hacked? That's always my other.
There's enough fear flying around on some of that cyber stuff right now that it's helping sell, but still, there's real risks out there, and the thing is they're already covered, and so people are having a hard time understanding why they should be paying for extra services to their insurance company.
Yeah.
That's a
It's
challenge.
true. In the personal line side, you see the leak detection as well. Like anything that's, yes, we understand the catastrophic preventative, uh, application for sending a consumer that. But you're right. Is the value prop translating? Does the consumer want to have a flood? No. Would they like to know about it sooner? Sure. But installing it, going through that hassle, you're right. It's not benefiting them day one. It's benefiting that insurance company to make sure it's an interesting, like, what's it tied to? Can you have more services that, even if it's not a full leak, that you get some home repair? I don't know. There's a lot of different ways to package, but I agree. I don't think the value properly translates.
There are companies that have actually been doing this kind of stuff for years, like Hartford Steam Boiler, right? They're part of Munich Re, and they've been into the whole manufacturing industry and all the machinery there, and they're helping manufacturers offer product warranty and able to monitor maintenance and stuff like that. And they have true experts, engineering experts in their field, right?
Yeah.
But you don't just go spin that up as an insurer, right? It's taken them a lot of years and to be able to have that level of expertise. I know the company I work for, one of the core expertise things is fire suppression, right? And so we have a team of people who are really good expert at knowing everything about fire suppression, right? And they come in and do engineering.
They're the ones you party with, is what I hear. No,
yeah. Yeah, the risk managers, great people to party with. And the other thing that I've seen is, again, another AXA XL thing is the construction ecosystem, where they're trying to create stickiness with their customers by realizing that they've got all these connections and relationships with all these construction technology firms. Why not put them together into an offering for clients, right? So they're building a whole ecosystem around construction technology as a way of creating stickiness for customers. There's a lot of ways that people are trying to figure out how to introduce value add into the equation, whether it's on the personal line side or the commercial line side. And I think that there's still huge opportunities for it. And I'm looking forward to seeing what comes next.
I am too. And on that note, as we're wrapping up, I mean, ITC is next week. I was just saying earlier that I feel like it's like the Amazing Race. I'm going to be like running from all these meetings that I've overscheduled somehow. What are you looking forward to? Other than Ludacris, who's, I guess, doing the closing show. But is there?
Sorry, did you say what I'm not looking forward to?
Sure. I don't hear that. I don't.
No, actually, I'll probably be there. I think I look forward to events like ITC every year, and I'll tell you, it's been hard for me for the last 18 months. You're literally talking to a guy who takes personal days from work to go to InsurTech conferences, right? So that's how geeky I am.
You didn't have to admit that. Yeah.
I'm sorry, but yes. My name is Stacey Brown, and I have a problem.
Love it.
But I'm looking forward to meeting people face to face more. It's started to kind of happen again, but being able to be in that environment, it's going to be really fun and exciting. And that's where the most productive conversations are going to be happening. Also looking forward to seeing what some people are doing that I'm not aware of yet, or that I'm not into, because it's such a massive industry. Nobody knows it all, right? And so you're always going to learn when you go to events like this.
I've had people say that they're like, oh, there's a lot of vendors. I'm like, vendors are like, it's shifted. It's like, it's their opportunities, vendors, meaning, yes, you maybe pay to work with them or there's a partnership, but you're right. Like, there's so much to learn from everyone in InsurTech, somehow a vendor, because we really, you can't work independent without the paper and the risk taker. And so I agree. I think there's so much to see next week. I'm really looking, and you owe me a drink after, being late. So I'm looking forward to that as well. But, to kind of like recap for the audience here, to put you on the spot, but for an insurance leader, are there like, after kind of everything we covered, are there a couple of takeaways that you'd want someone to walk away and that that somebody should focus on? So if I'm an insurance leadership, what are a couple of the things that I should, make sure that next week I go talk to someone about or start paying a little bit more attention to?
That's a good question. I'm going to take a different angle, something that we haven't really discussed, and it's just because I've been, re-listening to the book, The Innovator's Dilemma. And I don't know
Oh, I
if
haven't.
you've seen it
No,
or
I'm
heard
writing
of
it down.
It was written in the mid 90s by a Harvard professor who had spent years doing studies on multiple industries about innovation and why some companies could be successful with it and why other companies would not. And one of the things that was interesting is the innovator's dilemma is this concept of trying to figure out how to balance between investing your resources to sustaining the current, because that's what's expected and that's what shareholders want. They want tomorrow's paycheck and all that kind of stuff. And then knowing how much resource to invest in the future, not just in terms of continuous improvement of the current, but also the disruptive side of the future, right? The kind of future that takes everything that you know today and makes it kind of just not important anymore, right? And the thing is that type of investment is very difficult it's actually impossible to justify, because you're looking for financial proof and evidence and predictions on markets that don't exist yet. And it is truly the innovator's dilemma. It's like, how do I make these investments? How do I do this stuff when the evidence is not there to support the payback? And
that is so critical. I think it was Dig In a couple of years ago had Wozniak, Steve Wozniak, as a keynote. And that was one of the things he said, that he struggled before, he was Wozniak, right? But struggled to get the attention, the budget, the investment to try new things, because they're all crazy ideas, all of them. They're all that the market's already, insurance is, sold, not bought. All of these reasons for us to keep doing what we do and incrementally improve, when you're right, there's this leapfrog that's a leap of risk, but it really can have the most reward, especially for our consumers, but definitely I think for the bottom line as well. That's great.
Hopefully I'm leaving people with enough of a nugget there to at least want to go and learn more about what is this innovator's dilemma.
Love it. This is great. I really appreciate you joining, and I am looking forward to seeing everybody, but seeing you as well at ITC next week. And appreciate the audience joining us today. We will be sending out a recorded version of the episode afterwards. And also you'll be seeing an invite for our upcoming podcast in December, I think, with Ryan Hanley. So looking forward to that as well. But great talking to you, Stacey. I appreciate it.
Thanks for having me, Jocelyn. Have a great day. See you next week.
You too. See you next week.
Bye-bye.